What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and hopefully you've watched Sunday's video. If you haven't yet watched it, definitely go check it out, especially since this video is going to be quite short, considering I'm not really expecting much different, anything different from what I explained on Sunday. So you'll see Monday didn't move much, which is why I never posted yesterday, and then today price hasn't moved much either. It has, however, ran out Monday's highs and last week Wednesday's highs, which is interesting. And you'll see that price, it looks like it's going to close below this range, which I've drawn our attention to. So again, definitely go check it out if you haven't. But this is a rejection block level, which I anticipated. And it is also a monthly bearish order block level that we've traded into. So I am anticipating and expecting lower prices. At this point, it's just a matter of when. Now, obviously, we're moving into Wednesday tomorrow. And considering Monday and Tuesday haven't moved much, I'm expecting Wednesday right through to non-farm payroll on Friday to be quite aggressive in terms of its movement. So I would like to think that moving into the new day, we do start to see some downwards expansion. I'm looking for this low to get taken, this low, and then that'll get me comfortable in thinking that we're likely going to start trying to reach for these weekly fair value gaps here and here. So the thing that's adding to my confluence mainly with this is the fact that we do have this monthly bearish order block. Like I said, I've explained all this already, but we're trading into a very high frame PD array, and we're getting a reaction at it in a way which we'd expect it to. So although it's a high time frame PD array and we're not just getting a straight, turn in the market, we did here, it's going to take time for it to, actually deliver, which is why I'm happy to be patient with it, and why I'm moving into tomorrow and seeing how we have wicked up accumulated buy stops and still closed below the 50% level off that rejection block, the 25% level off that rejection block, and on the daily as well, we're closing below the rejection block on the weekly. Seeing all this is just telling me that it's likely we are going to see a continuation to the downside. So moving into Wednesday, I am expecting that, and I just want to see continued support of that. For me to remain confident in that bias, I am looking at this bearish order block, especially the one that, so you'll see at 8 a.m. we came up and ran these stops, and then price just fell again. This is now a bearish order block on the hourly. Now, although it's not a strong bearish order block in that it's on the 4-hour, this bearish order block, as far as I'm concerned, price shouldn't need to trade back above it. So what I'm going to do is I'm going to drag this out like so. I'm going to make it black. And then as we move into the new day, I don't want to see price trade back above this level, because if we're bearish and price is going to run lower, it's going to respect this bearish order block. It's as simple as that, really. So yeah, I'm just going to have that marked out on my charts. And then when we go to the other currency pairs and whatnot, we'll be able to find similar ideas that can help us, with a bias. But generally speaking, the fact that we've ran out buy stops here and here and got a rejection straight away, and we're expecting lower prices, I don't want to see price run out this order block. This should be able to hold its price. The very highest I don't want to see price go is going to be the 25% level, and that is at a stretch. Ideally, price doesn't even come back into it. I'd like to think that price can start running, especially for these Monday lows right here. So I have got my eyes set on that level. So let's just get that delineated like so. We've got some sell side liquidity right here. 1 second, let me just get my keyboard sorted. All good. So yeah, this is sell side liquidity right here. I like to make it dashed, and then I'll also just quickly delineate Friday. This is Thursday, and this is Wednesday. Yeah, so that's pretty much the week. Let's have a look at where the Sunday opening was. I believe that is right here. That's a Sunday opening price. There's a little gap here. Another thing to take note of is this Sunday opening gap. The fact that we're back below it, we should pay attention to this, because as far as I'm concerned, this will act as like a inversion fair value gap, in that once we've traded, although we're gyrating above it, below it, above it, below it, it should still act as a level that we can key off. So I'm looking for price again to find resistance at this level, which is why I was saying I doubt price is going to even come back into this order block at all, let alone the 50% level. So the fact that we're now below that Sunday opening gap and that Sunday opening price specifically, that this is just more confluence as to why I don't want to see price retrace anymore. I want to see some proper downwards pressure now and start to see price move towards these lows. So that's what I've got my eyes set on moving into Wednesday. And Wednesday's probably, I haven't traded this week yet, but it looks like Wednesday's going to be the day. So yeah, let's make this all red, just because I don't want to see price go back above it. It's not that it can't do it, it's just that ideally, especially the way we'll look at how price is, filling its back and forth, it's rebalancing this price range. Why? Because it's likely that we're going to move away from it. So it's just a matter of waiting to see when that is. letting the Asia range deliver, and then we've got that Monday low. We've got these lows, which I like the look of as well. And then again, if you've watched this week's videos already, Sunday's video already, you'll know that I have my eyes set on this weekly fair value gap down here. So I am expecting price to be reaching down into these depths, ideally. Now let's say we trade back above this Sunday level. If that's the case, then and only then would it be possible that we are going to keep rallying. And if that's what happens, that's what happens. I won't personally be trading because that's not my bias. But if price continues to respect everything I'm outlining, that is going to help me with my trades, and that's going to allow me to trade. Other than that, I don't want to be involved, especially not this close to elections and whatnot. But yeah, you can see these are reference points which I'm going to be looking at as price makes its way lower. But we'll talk more on that moving into tomorrow. So that's everything on dollar. Now we have a bias of wanting to see more downwards price action. Let's see how GBP's been moving. I haven't really been paying too much attention, and you can see that we are rallying quite heavily. Now we will go to the daily here first, and you'll see, oh, we've got quite more expansion than I expected. So although I drew out this bullish order block as a potential trading, as a point for price to trade to, you can see how price has expanded quite higher and created a bullish order block today on Tuesday, which is interesting. So this, as soon as we traded through this, and it looks like we're going to close above there, this is now a bullish order block. Yes, we traded through it on Friday and Monday, but the fact that we're going to close above it will make it even stronger as a bullish order block. So we'll keep that in mind as we drop down to the lower time frames. And that means we should be looking for bullish. If we're expecting lower prices on dollar, we just need to look for any kind of bullish PDRAs we could be drawing to. So there's this level up here, which is a rejection block level. And then there's this high right here, which it looks like we're about to take out right now. Now this is a bearish order block, yes, but if we're on the buy side of the curve, we shouldn't be worrying about this bearish order block. We should be looking for imbalances, and we should be looking for swing highs, which is why I've got the rejection block levels marked out. But as we drop to the lower time frames, that should help us. Weekly here, again, go watch Sunday's video if you haven't. Here's the 4 hour, and you can see we're starting to see some expansion. So assuming price is going to continue to rally, that means we do have a breaker, low, high, lower low, last up close candle, which just happens to be where that bullish order block on the daily is marked out. And you can see again how price has been gyrating around it and has finally left it. So moving into the London session tomorrow, I would like to think we can see some continued rallying, and then we have a nice imbalance here that we can use as our first target for price on pound to see if we can get up there. Now obviously it's, what time is it over there? It's the end of the day, right? Trading day, whatnot. But nonetheless, this is a significant imbalance. Why? Because it's on the 4 hour. It's in the premium of this range, high to low, and you can see we're expanding away from price. And for price to drop back, if price was going to drop back below this, it will take a lot of effort. And again, this kind of consolidation, I don't ideally want to see price do that. Let me quickly delineate my daily dividers real quick. And by the way, I did used to use an indicator for the daily dividers. The only reason I like doing it myself is because although the indicator points out the daily dividers, I like to, it feels different when you actually have them on the charts, because price magnetizes to the levels, and it's a lot more clean when I'm drawing my PD arrays around it, my marking out. So that's why I decided to just go back to how I used to do it. But shout out to the guy that brought my attention to that nonetheless. So here's the Sunday opening price, and you can see we only dropped down below it during Sunday, and then we've been trading higher since. And look how we found support on that and then left it today and just been trading higher. Very interesting. And same as dollar, we're just looking for swing highs to get taken. So we're just looking for swing highs as targets. So we've got this buy side liquidity up here, assuming we're on the buy side of the curve and we want to see higher prices. We've got this up here, relative equal highs, which is where the imbalance is. And then this was a rejection block level. Now I'm not too fussed about it being a rejection block level, as in behaving as one. So more time, I'm gonna just delineate it as relative as highs, because that's where the stops are going to be residing. And this is all assuming that dollar does keep dropping and giving us, that downwards price action that we want to see, because all of this liquidity, I'd like to think that price can crawl into and make its way through. And there's a massive imbalance here. You see this? If anything, this is the imbalance we want to pay attention to. I'm not too fussed about this daily one, because this one's quite large in itself. So it'll be interesting to see if price can get up there as we move into the rest of the week. Now, it is very rare for Mondays to make the low of the week, but it is possible. So we do need to keep that in mind. And again, similar to dollar, there are certain levels that I don't want to see price drop below as we move into Wednesday. So first of all, This is disgusting price action. Why is it disgusting? Look at how big these wicks are. This is very messy. It's not ideal environments to be trading in. Very choppy, back and forth. This is why I haven't traded yet this week, because I don't want to be in this chop. Look at it. But nonetheless, based off every time I see a down close candle, I'm looking at it like ideally price should be able to respect you if we're going to stay bullish. So I'm going to quickly jump up to the 4 hour, and now this level right here, which is what we've already pretty much delineated, price shouldn't need to drop back below. I would like to think that we can have a a more nearer PD array, so to speak. And I am looking at this bullish order block specifically. So let's delineate this. And the thing is, we always have to leave room for error. But when I see back and forth price action rebalancing to this extent, ideally, I don't want to see price drop below it. I'm not really a fan of it. And if it does, it's very indicative that we're likely just going to keep running lower. And that's fine, but if we have our targets, we should, we should assume bullishness until proven otherwise. Is where I'm going with that. So I'll be paying close attention to that, alongside with the dollar at the same time, as I anticipate dollar to continue to trade on lower and respect its opening gap, if that makes sense. One thing I do want to look at before we continue over here is I do want to compare it to the euro, because this will have times like this is when we will see the what we call divergence, and voila, there it is. So euro today created in fact, let's add dollar just for the, okay, right guys, beautiful. So you can see how pound's showing strength because it failed to make a lower low. Euro made a lower low, whilst dollar made a higher high. So these two are in tandem, right? Tuesday took out Monday's high, Tuesday took out Monday's low. Whereas pound's the one saying, listen to me guys, I want to be really strong today, I want to move crazy. And we saw that here. So with pound refusing to take out that low, now this is with a bullish bias on pound, we need to take that into consideration first. If we have a bullish bias on pound refusing to take out that Tuesday low means that we're probably going to see pound do a lot of movement very quickly and earlier on in the week. So moving into Wednesday, when we're seeing that expansion and that push higher, pound's probably going to be the stronger pair. However, euro's going to need to catch up, assuming dollar is doing as we expect with it moving lower. So seeing divergence like this, you see how I could have chose to look at this divergence at any point of the week. I could have looked at it on Sunday or tomorrow or whatever, but you notice that I looked at it today. Why? Because I saw pound was rallying significantly, whereas dollar wasn't. And it's times like this which are very indicative of changes in market structure and changes in the market on a higher time frame, and we're seeing and witnessing that here. So pay close attention to this, especially this week. But my point is, pound is hinting to us here saying, look guys, I'm not willing to go lower. These have just grab stopped here and here, and remember, we have a bias and pound's the only one supporting it, like to that strength. It's hard to explain, but I'm saying there's clear divergence here, and this is all supportive of me wanting to see higher pound and lower dollar as we move into the rest of the week. So very exciting, and we just need to take that into account as we trade into Wednesday. So that's going to be everything on pound. Hope that will make sense. Again, I do suggest you watch Sunday's video. And here is Euro USD. So we'll start here on the daily as well, and you'll know I marked out this imbalance from the weekly. Now, although I mark out these imbalances, I always mark them out because price could very well go and fill it. If anything, and let's say we are bullish, and we are very bullish, and that is our bias after all. If that's the case, us leaving gaps like this open is a bullish indicator and signature in price anyway. So it's price failing to continue, to fill. Price failing to fill discount PD arrays. This is a discount PD array, is bullish because it's not doing what it needs to in the discount. It's moving away from it. So that's something to take into account. So although I marked these out as potential areas for price to trade to, now that price isn't trading to it, it's now acting as an indicator to us. So when you watch my weekly reviews and I'm marking these things out and price isn't necessarily trading down into it, we just use it as an indicator, like, okay, maybe we're more bullish than we realize. Maybe there's more to this than we realize. Nonetheless, easier said than done. Crazy day, came down, grabbed all what is to do in accumulating sell stops. Why? Because we want to see higher prices. So if we are going to, again, this is all assuming dollar continues to behave, we want to start looking for buy side liquidity to get taken here. We want to see buy side liquidity get taken up here as well. But let's drop down to the 4 hour, take a closer look. and you can see how we grab stops and we're pushing. So as soon as this high gets taken out, this will be a bullish order block. And that because that high hasn't been taken out yet, I don't want to call it a bullish order block just yet. But as soon as that happens, and whether that happens in London session, Asia session, whatever, as soon as that high gets taken out, I will be comfortable not expecting price to drop back below the 50% level off it, because that's mean threshold. I'll say that again. As soon as this high gets taken out on the 4 hour, I'm happy to treat this as a bullish order block, and that means I don't want to see price drop below here. What does that mean? If we're looking for longs, we can put our stop loss there. Where are we expecting price to go to? We've got highs here, here, and this is a weekly fair value gap. It doesn't look like one here though, does it? Nope. Let's go to the 1 hour. Disgusting price action there. This is more of the imbalance I like the look of. And you can see our price is pushing. So it's the Asia session. Hopefully moving into tomorrow, I'm expecting it to give us a nice setup, basically. The London session, I'm expecting a nice setup based off how Asia trades tonight, especially with how much we're moving this later on in the day. And with all the news releases you can see we have. Let me quickly look at where the Sunday opening price for euro was. Right here. And what I like about this is that, again, you see how pound didn't drop back below that Sunday price, but euro has. So we've been down below, came up one more time, grab stops, and now we're moving away from it again. I like to see that. Also, again, if we run out these highs, which I was just talking about, we have a low, a high, a lower low, and then we'd have expansion, assuming price trades. That means we treat this consolidation as a breaker range, and price won't need to drop back down below that. But we can talk about that range in tomorrow's video more. So let's let Asia let Asia trade. And remember, this is that order block I was talking about. Ideally, price shouldn't need to come back down there. If we're bullish, it shouldn't need to. It can, but it shouldn't. And look at how close that is to the Sunday opening. You can't make that up. You know, we can use that to our advantage as to our bias and where we want to see price trading up to. Where? Relative equal highs. Where's our relative equal highs? Here. Here. You see, it's really, yeah. I do have videos on buy-side liquidity. If you just look at GBP baby buy-side liquidity, you'll be able to find them. But my point is, it's here. You can find them. It's wherever price is too smooth, price is going to run for, because that's where the stops are going to be residing. Up here, and then there's a beautiful gap here, and then wherever. We don't need to worry about that for now. But we just need to know where the drawn liquidity is. Let me just quickly check one more thing. Another thing as well, there's divergence. Why? Look. You see how price here has made a higher low? Look what dollar's done. Dollar made a higher high, whereas euro failed to make a lower low. So we've seen divergence on two levels now. We're seeing strength in the pairs, and we're seeing, dollar running out stops. This is all indicative. This is typical of price. Or I could be completely wrong and I'm reading it how I shouldn't be. But my point is, we're seeing divergence, guys. And when you see divergence like these at these times of the year, especially right before non-farm payroll and things like that, there's a reason for it. And that means that dollar's probably going to have to do some catching up to do. And we're probably seeing hints of that now, assuming it respects the levels which I drew our attention to. That's going to be everything, guys. Anyway, thank you so much for watching. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, join the Discord. And yeah, hope you found this insightful. Thanks for watching. Peace.